What is going on, guys? What is going on? A lot of people joining the chat this morning, obviously because of the craziness going on at market open. The CPI data came out. I like to stream a few minutes into market close. Market close. Freudian slip into market open because I want to give the market a bit of time to digest what's going on. It's very easy to get caught up in what goes on exactly at market open. Let me say good morning to some of you guys, and then we will dive straight right into it. John Carter, Kareem, what's going on? George, what is going on? Clear Hayes, Ola, Luis, what is going on? Nick Roy, Mjed. Yeah, and guys, hit that thumbs up so that other people find the stream. It is really important. Apparently, you guys always remind me.
Gaining momentum in the House to ban members of Congress from trading individual stocks. Some in the Senate raising some early flags, arguing that some proposals go too far or might be too difficult to implement. Joining us this morning is Jay Clayton, former SEC chair.
Sorry, I'm going to mute that real quick. Just give you a little bit of a brief update, and then, yeah, we will be checking in with CNBC as the day goes in. So the gist of it is that the market is down because inflation came in hotter than expected. So unfortunately, inflation, the CPI rate hit 7.5%, right? And what was expected was a 7.2% inflation reading. So what this basically says that what Jerome Powell basically projected about inflation cooling off into 2022 is, surprise, surprise, totally off base. It does not look like it's going to be cooling off. It doesn't look like tapering has any sort of effect on inflation. That is not really a surprise to anybody. I think people were expecting him to be more aggressive during the last Fed meeting, maybe, raising the federal funds rate by 25 basis points, maybe committing to selling assets off of the balance sheet. He committed to neither of that and said, wait until March, bitches, and then I'll get to it, because March is when the tapering is done. So again, there are three things that the Fed is doing. Tapering, right, which means the stopping of asset purchases, and that is expected to completely stop by March. And then raising the federal funds rate, which he has not done yet, but said that after tapering is done, we will likely do 3 to 4 times this year. I'll get into that a bit more. And then lastly is selling assets off of the balance sheet, which he hasn't committed to either. So really, we have not taken any measurable steps to curb inflation whatsoever. And so it's not a surprise that it came in a bit higher than expected. The market didn't like that. And so we saw the 10-year, and if you followed my market analysis on Twitter or on the Discord, the 10-year touched the psychological level of 2%. It touched that this morning. Now, how do the rates rise? Well, when inflation comes hotter than expected, what happens is you see a sell-off in the bond market. And remember, the bond market is a lot bigger than the stock market, way bigger than the stock market. And so because bond investors are afraid of inflation, they're like, hey, why the hell do I want to keep my money tied up in this fixed rate asset when inflation is just going to basically, it looks like inflation reading is so hot that even if I'm making 2% on my money, this 7.5% inflation rate is going to suck it dry, right? There's still going to be an impasse there. So bond investors start selling off their bonds. And once you sell off bonds, the rates naturally go up, and vice versa. When you pour into bonds, the rates naturally go down. So the rates naturally go up. When the rates go up in the bond market, who doesn't like that? The stock market. The stock market doesn't like that because companies are now like, oh shit, rates are going up. That means that it's going to cost us more to borrow money and build out operations. And our future earnings are now considered less valuable because the cost of money is going up. So that is the relationship between inflation, the bond market, and the stock market. Hopefully that makes sense. If you guys have any questions, leave it in the chat, and I will elaborate more on that. But that is essentially what happened. And so we are now seeing a sell-off in the markets. It has curbed somewhat because I think that the inflation reading 7.5 versus 7.2, the market might think that that is manageable for now, especially as companies are reporting really good earnings. I mean, you saw Disney yesterday reporting amazing earnings. Obviously, the tech companies, Microsoft, best quarter ever, Apple, best quarter ever, Google, best quarter ever, Amazon came in better than expected, certainly better than the last time that it reported earnings. So, at the end of the day, the stock market only wants to see good earnings. That's it. And that's why I said, or I tweeted this out, just to reassure people that, what did I tweet out? Right here. I said, rate hikes are not the devil. And the reason that I tweeted this out is because, as I said just a second ago, at the end of the day, all the market wants to see is, can companies report better earnings than last time? And that is why, on average, rate hike cycles, if you look at them in a broader sense, are not the devil. And as a matter of fact, they are actually okay for the stock market. There was only one time between 99 and 2001, this was the dot-com bubble, where the market ended up more red than it did at the beginning of the rate hike. All other times, the market ended up super green. So rate hikes themselves are not enough to curb gains in the stock market if the companies continue to report good earnings, which so far this last earnings season has showed that they actually have, right? So, you are seeing a lot of red in mega cap tech, which is not surprising. However, banks are doing well, which is why we continue to hold XLF. And also the consumer cyclicals and consumer discretionary is not doing that bad either. And if you recall from my last video, I said, consumer cyclicals and consumer discretionary during high inflation environments, high interest rate environments tend to do well. And you see XLP, which is the consumer staples sector of the S&P 500. Consumer staples means, necessities like food supplies and whatnot, still sitting at the 50-day moving average, still doing okay. XLY is the consumer discretionary. I think that at the 300-day moving average where it was just a week ago, there is a good opportunity here to dollar cost average for the, for the rest of 2022, assuming that we get those rate hikes. Funny enough, and I'll get to your questions in a second. Funny enough, I'm trying to look at what the estimates are for a Fed rate hike on the Fed Watch tool, and the page is broken. So either they took it down or they are just scrambling to come up with an estimate this morning due to the high inflation reading. So I'm going to keep refreshing this and see if we can get a reading on what the estimates from the Fed are on the type of rate hike we will likely see in March. As I showed you in my last video, the rate hike, actually, you know what? Where can I pop this up? Where did I post it? Did I post it on Twitter? I might have posted it on Twitter. But the expectations for a rate hike for March, let me see. I might have posted this on Twitter. I might have not. No, I don't think I did. Damn it, I wanted to show it to you. So the expectations for a rate hike, for a 50 to 75 basis point rate hike, increased to 30% by March. So, yeah, like I said, we will get back to CNBC in a second. Let me just go over your questions real quick. Do you guys have any questions about what I just stated? I know it was a lot. Anonymous, thank you so much for your $20 donation to St. Jude's. Appreciate you. The Fed has done nothing, and it's all out of ideas already. No, Led Zepp, that's not the case. The Fed has done nothing, but it is not all out of ideas. The problem is we have all of their ideas, and they are actually effective tools. We know they work because they always work when inflation is high, not only in the U.S., but other global markets as well. The central bank systems really operate the same in all of the major economic powers in the world. They have a central bank system, just like the Fed. They have monetary policy, including tapering, rate hikes, balance sheet runoffs, et cetera, just like the Fed does. And they do work. It's just put them to fucking work. Z Valet, love your channel, Z. Thank you so much. We share the same name. All right. Z, let's see. Is SPY filling the gap or what? Okay, we'll talk about the SPY. Are you still holding AMC? Come on, fam. Francisco. Come on, fam. AMC is a trading stock. It's not a holding stock, okay? And if you want to talk about why that is and somehow that offends you, then we can talk about it. Guys, AMC is a stock, okay? It's a corporation. Just like any corporation, they don't work for you. AMC is not your ticket to freedom, okay? It's a corporation. Don't let anybody dupe you into putting all of your money in AMC thinking that you're somehow protesting by buying the stock. The CEO himself sold millions of dollars worth of stock, okay? It's a corporation with a CEO that gets to make decisions that are not always going to benefit you, especially if you're emotionally trading this thing like it's your ticket to freedom. Now, if you look at AMC and you're like, is there an opportunity for me here? And you look at the chart and you think there's an opportunity for you there. And there might be. There's a death cross here, but it looks like it might be finding support. Yes, I trade AMC, but if you're holding AMC and you bought in at $70 and it's now $19 and you somehow think that you're engaging in the greater good by bag holding this thing and burning holes in your pockets and your portfolios, I don't know what to tell you. I feel sorry for people that were duped into that storyline. Again, if you're looking at this and you're like, it's at a tradable level, I want to be able to trade this and make some money off it, great. But if you just bought it in the 60s or 70s and are bag holding it and think that you're somehow protesting, the CEO himself sold millions of shares. Chill. Common sense. Are you going to make a Rumble account? Probably not. I don't know if I need one. I don't know if I need yet another account. All right. Why are rent controls bad? For who? I'm not sure what you mean about the question. How about small caps? How about them? Are you saying is it good in a high interest rate environment? The last time small caps did okay in a high interest rate environment. Again, at the end of the day, the market wants to see earnings, right? Show and prove, especially during times of distress. If you look at IWM, I do not like this bear flag forming, right? So there was a bear flag forming here on IWM, and you see the same thing forming now. So if you look at this is a bear flag. You see another bear flag forming. On IWM is the ETF that tracks the Russell 2000, which are made up of a bunch of small caps. This does not give me comfort, I guess. So no, small caps should not be the majority of your portfolio anyway. If you want to engage in small caps, that's fine. But the majority of your portfolio should be blue chips, not small caps. So yes, you could buy small caps for a little bit of your portfolio, but it shouldn't be the majority of your portfolio. GGPI, what is it doing? Nice. We sold cash secured puts on GGPI because GGPI is potentially merging with Polestar, and it was, back at the $10 reference price. So we sold cash secured puts that would give us GGPI. This was a long time ago now. That would give us GGPI shares below $10. And it spiked, so those cash secured puts are likely up again. But yeah, if you want to take advantage of that Polestar merger, that is the SPAC. What if you got a 290 cost basis on AMC? Well, then do what thou wilt. You're up 10x. And yeah. Cybertruck Duo, why is GGPI pumping? What's up, Omar? I don't know. You tell me. Look up the news. You look like my cousin, Zia's Pizza. Oh, all right. Well, your cousin must be a great-looking individual. I'm kidding. SPY bouncing so hard makes no sense. No, guys. I mean, look, it's half an hour into market open. You know, it's still down 0.5%. This isn't bouncing so hard. This is inflation. Still, I mean, look, if the economists, if the Dow was expecting that inflation would be 7.2%, that's not exactly great. That's still high, right? So it came in at 7.5%. And you are going to see volatility as a result of that. I mean, look at the VIX. The VIX is still, not able at all in 2022 to get below 20. There's still volatility in the market. So I'm glad it didn't come in at 8.5. 7.5 certainly seems manageable when your expectation was 7.2, but it's still high, right? And that's why like the NASDAQ is the one that is going to take the most hit, because the NASDAQ is the one that is full of mega cap tech stocks, which are the most hit when rates spike. And you see the NASDAQ is down almost 1.5%. So yes, the S&P is going to do a little bit better because, as I said, consumer staples, consumer discretionary, go back to my last video. Consumer staples, consumer discretionary do well during high inflation, high interest rate environments. And the S&P 500 is full of those stocks. But the NASDAQ is not. The NASDAQ is full of mega cap growth. So that is why it is, taking the hardest hit. But you're going to see this type of volatility. Also, there is somewhat of a bear flag in the NASDAQ potentially, which also doesn't give me, much comfort. I still like the NASDAQ at the 300-day moving average as a dollar cost averaging point, but doesn't give me like a whole lot of comfort, especially because the next Fed meeting is March 16th and we're February 10th right now, right? Anyway, let me go over your questions. Enough rambling. Can you please discuss Facebook? Yes, I will discuss Facebook. I'm long AWK, just added some. Would you agree? Yes, AWK is the water stock. Water, regardless of what happens during times of conflict, during times of inflation, I do like water for sure. I think water is a rare commodity that we don't think of all the time. When we think of commodities, we think of oil, corn, gold, etc. We don't really think of pork bellies, inside joke. We don't really tend to think of water, but water is a very valuable commodity. What's up from Montreal? Stevens Routhier says, what's going on, Stevens? Thoughts on buying leaps? If you are truly long-term, Dan, and you are not going to be swayed by any sort of, downturn or any sort of pullback in your stocks, then sure. Okay. If you are the type that is going to panic if your position is down even slightly, then no, do not buy leaps right now. But yeah, I mean, if you're okay buying a leap out, $5. Oh my God. 1 year into the future, 1 to 2 years into the future. Sure. Just, know that this is probably not the end of the volatility for sure. All right. There's something that I want to talk about. I love how you go through every single comment. Fuck Meet Kevin. He only ignores people. And what is the website to check interest rates? All right. A few people have asked me to speak on this in the YouTube comments as well as in the Discord. And I've been seeing a lot of slander against this guy, Meet Kevin. Admittedly, I don't watch him. I don't watch any YouTubers for the most part. Not consistently, at least. I see what you guys send me. There are some that I respect. There are some that I know only purchased a camera at Best Buy in 2020 and decided that stocks was the way to grow a YouTube presence and have never traded stocks before 2020. That is easy for me to see. However, I'm not sure, and maybe you guys can enlighten me in the chat, okay? I'm not sure what is the main qualm that a lot of people have with this guy. Is it because he just sold all of his stocks? That's why you guys are mad? Like, is it because one man chose a position for himself. And, you know, from the videos that I've seen, he has a family, I think, right? The guy's doing what's best for him and his family. I'm not sure did he fuck anybody over? Like, why is there so much backlash against this human being? Is it just because he said, I decided to sell my stocks? Did he sell you guys on a certain stock and then, you know, decided to rug pull? Like, did he pump it and then decided to rug pull? I don't think that's the case. You guys can let me know in the chat. From what I can see, all he decided to do was have low conviction on where the stock market is right now and say, hey, look, I think that there is more of an economic downturn coming. I don't think that the story is isolated to rates and CPI data. And because of that, I have a large portfolio that I now want to rotate into mostly cash, right? Is that the story? And that's why everybody's mad? I don't get it. And the thing is, like, is it... If you guys follow this guy as a financial advisor, and if you guys want me to pull up a video or you have a video to reference, let me know. I'll watch it here live and I can comment on it. But, you know, if that's the extent of what he did, I mean, if you guys follow this guy, right, as a, I don't know, financial guru or whatever, then if he sold his stocks and you follow him, why don't you sell your stocks, right? I guess I'm not seeing where the ire is, because if he's transparent enough to tell you guys, hey guys, I'm selling my stocks, right? He doesn't have to tell you that. He can sell his stocks behind his audience's back. You know, I guess I'm just struggling to see where the crime is there, because if he's telling you, hey guys, I'm selling my stocks, I think XYZ is going to happen in the market, maybe he's, you know, from his perspective, he's giving you guys a hint, or his followers a hint, and you guys can choose to do the same if you like. I guess, I don't know. Let me read the chat. I probably missed a shit ton of comments in the chat. Let me read the chat. And if you guys want me to dive into this, I will. But if you want me to get back to stocks, let me know. I mean, we could do both, but let me see. All right, let's see. Z, basically everyone's being a little bitch about it. Kevin is a nice guy. Yeah, I don't know him, but if his crime is, here's what I'm doing. I sold my stocks and that's why everyone's hating on him. Meet Kevin helps out watchers with his beliefs and get the fuck off his channel. Don't run around trying to get people to hate him. Me? I hope you're not talking to me. Did you hear what I just said? Maybe you're talking to other commenters. People too dumb to make their own financial decisions and want to blame someone. Kevin bailed out, then jumped back in a few days later after saying we were in for a long fall. Joseph Brogna says, can you verify that? I don't know. I would be very surprised if that is, as a matter of fact, what happened. That someone would, you know, and even if that was a fact, let's just say that was a fact. Let's say that he came out and said, guys, I'm selling. I don't feel good about the market. Sold. And then a week later said, guys, you know what? I've been reading up, talking to my economist friends, talking to my, you know, stock trader friends. And actually that was stupid. Now I'm jumping back in. Even if that's the case, I mean, he's letting you guys know that, right? Mr. Slicks, you are full of shit. Would love to hear why. Asshole. Would love to hear why. It's a bunch of haters because he's rich and he sold his stocks. Don't be rich and an influencer. Meet Kevin came, traded, made millions, lost millions, and left with a nice t-shirt. Yeah, I mean, guys, if you know, if the guy is making a bad decision, I get it. Certainly no one is immune to criticism. You know, especially people who put themselves out there like me or anyone else. If there's a critique there, it's fine. But you know, everyone's saying fuck him. I guess I want to know what the crime is. Mr. Slicks, no, dude, it's that he spent all his time pumping stocks, telling his followers to buy, which was in the millions, then bailed out. He fucked over millions. All right, so let me say this. if it's if that is the case, right? So again, I don't watch the channel. So I don't know his approach or his presentation with how he talks about stocks, okay? If it's, hey guys, put your money in this. I'm telling you I have faith in this. I'm telling you this is where you should put your money. Then I can see where there might be some sort of resentment there, for sure. If somebody approaches their videos in that manner, and again, I'm not saying he does. I'm not saying he doesn't. I don't fucking know. You guys tell me. And if you point me to a video right now, I'll watch it and we can go over it. But if it's just a matter of him saying, hey, I like this stock, but do what you guys want or do your own due diligence, or, the way that I talk about stocks, I always say, hey, from my experience, high quality stocks, that is the way to go. Don't fill your portfolio up with shit. If you want to speculate on DraftKings or on Beyond Meat or on whatever, that's fine. But those stocks should never be the cornerstone of your portfolio, right? Very different than if somebody's saying, hey, I'm putting half of my portfolio in Fubo or Tattooed Chef. You guys definitely should do the same, and this is how you're going to get rich. That's a very different approach. I have no clue, but it sounds like some people think that's some people's interpretation are that's what he does. I don't know. But this Mr. Slicks guy seems extremely vexed by this. He's an asshole. That's why. Why are you defending him? I mean, clearly, Mr. Slicks, you lack nuance, man. You lack nuance. Rewind the tape. I'm saying that if his only crime is that he made a business decision, fine. If he's telling you to buy something and then rug pulls on you and then tells you way later, that's a different story. Okay? That's what I'm saying. Then he sold, if Kevin pumped, then he sold at a loss. Who cares if he sold at a loss? Who cares? Yes, I mean, you can criticize his decisions, but he sold after being down 32 million to 20 million. Okay, again, what is the crime there? What is the crime there? Someone making a bad trade or a bad business decision does not mean that you guys should hate him. Again, very different than if somebody said, yo, you guys should buy this, and then he jumps out of it and doesn't tell anybody until later. That's a different story. Meet Kevin doesn't pump. All right, let's talk stocks. All right, let's go back and talk stocks. Let me know what you guys talk about the stock market, please. Okay. Let us go back and do that. MTG Corzan, will a Russian invasion of Ukraine tank the market? Yes. No. Okay. So a Russian invasion of Ukraine, one, I don't think is going to happen. Okay. Here's the thing. You don't telegraph your position way ahead of time. All right. You just do it. Saddam Hussein was like, look, motherfuckers, Kuwait is mine. And he already started rolling tanks into Kuwait. Right. Now, he did threaten Saudi Arabia ahead of time. Right. And which is why the U.S. came in and had time to defend Saudi Arabia. But when you want to take something over, you just take it over. Right. So I don't think that Russia is going to invade Ukraine. I think that Russia is definitely irritated by NATO encroaching more and more on its borders. Right. Now, I'm not pro any country, to be honest. I examine things objectively. And I can easily see that if there was a coalition force at the Canadian-U.S. border, or at the Mexican-U.S. border, and they were encroaching on the U.S. would not just wag their finger. The U.S. would nuke those motherfuckers, okay? So Russia doesn't like NATO encroaching on its borders. So Russia's like, hey, guys, I'm going to start talking tough because you guys are doing something that we think you shouldn't be doing. We are a sovereign nation. We also have our own interests and our own decisions. and you are encroaching on our border. So I think that the Ukraine conversation, from my view, from what I've seen, living in war-torn countries for a part of my life, being, balls deep in politics and history my whole life, I've never seen a country telegraph their position that far in advance. To me, this looks like a threat. But yes, a Russian invasion of Ukraine, initially, you will see the oil market spike, right? Like oil will get to over $100 a barrel for sure. The price of energy will go up. But at the end of the day, and unfortunately, war is good for the economy. Unfortunately, that is the case. And the U.S. figured out that formula in World War II. They were like, holy shit, we are, on the bottom of the top 10 of world superpowers. After World War II, the U.S. took the #1 spot and never let it go. So unfortunately, I don't think it will tank the market. And the reason why I say unfortunately is because I don't want war to be the reason that the economy booms or that the market booms. But one, I don't think Russia is going to invade Ukraine. And two, I don't think the market is going to tank if it does. But thank you for your question. 7.5% CPI, 2% down on S&P, and now straight back up. Can somebody explain this to me, Christian? Yes, the S&P is not going to be the index that is the most affected by the bad inflation numbers. Also, you guys not remember what happens every single time. There's a delay. There could be a delayed reaction, right? There could be a delayed reaction. The market is not right now. What the market is experiencing is called volatility. But there could be a delayed reaction. The market doesn't have to react when you want it to react. As a matter of fact, it a lot of times doesn't, because when things start to sell off, then you have buyers that come back in. And when FOMO buyers come in and now want to piggyback off those buyers, then you tend to see the smart money dump on the FOMO buyers. Guys, this is a market. It's a dynamic of supply and demand. There's a smart money who buy when things are cheap and fade these sort of events, right? And then there's the FOMO buyers who get dumped on. So that's why I always tell you, it does not matter if this is the bottom. If the SPY is at the 300-day moving average, you buy that shit. Which we did. If the NASDAQ is at the 300-day moving average, you buy that shit. Do not be concerned with whether this is the bottom or not. Look at not this article. Look at the trends in history, right? When every time that there's an S&P 500 sell-off and we hit correction territory, the median return is 15% thereafter, right? If you look at this, corrections are good for the NASDAQ. Most of the time, within 3 weeks to a month, we are out of the water. And from 3 months to a year after a correction, we are almost certainly out of the water. Okay. So this is at the end of the day, this is a market, and I'm not sure why this volatility is surprising you. Right. And Jean Picot donated $5 to St. Jude's. Thank you so much, Angine, for your generous donation. And I'm sure St. Jude's thanks you even more than I do. What are y'all buying lately? Andrew Yee. Thank you, by the way. You made me so much money on IWM. No problem. No problem. And thank you so much for your donation. What are y'all buying lately? Well, Andrew, if you follow the Discord, and I don't know why you wouldn't, but you would know that, the blue chips were a no-brainer. So we picked up Microsoft at 273 after the earnings overreaction, which basically was right at the 300-day moving average, currently trading at 307. We picked up Amazon at 2,800, currently trading at almost 3,200. We picked up Google at the below the 200-day moving average, currently trading at 2,800, right? And then also we picked up XLF, which is the financial sector of the S&P 500. This is a no-brainer, especially as we head into a high interest rate environment for the rest of 2022. This was at the 200-day EMA. We picked up XLF. And by the way, I did videos, and this is all stuff on the Discord. We picked up XLE as well, as oil is nearing $90 a barrel again. almost hitting 70. No brainer. We also picked up, what else did we pick up, guys? Do you guys remember? I think that was the bulk of Facebook. So we picked up Meta a couple of different ways. I actually sold a cash secured put a while before earnings at 300, which I had to roll because we are now down on that. But then we also opened up a bear call spread to offset a cash secured put, right? Because have to mitigate it. But, you know, Meta sitting here at, like I said, I did a whole video on Meta, but it was trading at 13 to 15 times earnings. Very low for a mega cap tech stock. I still think this is low. And yeah, you could start the dollar cost average in it. A while back, I picked up Disney, which thankfully is back in the 150 range because I actually picked it up before this drop. I think I picked up Disney right at like 152 back in December, and then it gapped down and thankfully had a monster earnings. I still think Disney is a good pickup as we head into, as I said, this is a consumer discretionary stock. As we head into a high interest rate, high inflation environment, and as the mask mandates in California and other blue states are starting to be lifted indoors, Disney's going to go back to capacity. I actually was at Disneyland, California in November. I'm really going to miss, I know it's bad to say this, I'm going to miss COVID. Disneyland was the best, right? Because anyone that has gone to Disneyland, especially in California, which is smaller than Disney World, knows how crowded it can get. And they did away with their fast pass or whatever because it was, I guess, seen as sort of elitist that you could just pay more money and bypass the lines, and families that couldn't pay more money had to stand in line for hours. So I get it. They did away with the fast pass, but during COVID, you had to book reservations at Disney, and they only allowed a small number of people in Disneyland. So like if you got a reservation, every ride had like a 10-minute wait. It was amazing. I'm going to miss that, but Disney is going to be back to full reopening. Disney Plus subscribers came in at 130 million plus, which is amazing. And they pulled in a monstrous almost $22 billion quarter, beating EPS as well, raising guidance. And I think that they were just upgraded to, let me see, actually, you know what? I have a bot on the Discord. And by the way, if you guys want access to everything, link is in the description below. We added a bunch of exciting new bots, one of which I will show you now. I'm just trying to pull it up. Just want to make sure that I pull up the right thing. All right. So the upgrades and downgrades bot. I think I don't want to sit here and search for it, but Disney was upgraded to 220, to a price target of 220. Uber was also upgraded. This, by the way, is all in the Discord. You also have option sweeps notification. We have a scalp bot. We have a huge option order bot. We have a stock breakout bot, which shows you the stocks that are about to break out. It looks like TSM, Taiwan Semiconductor. Oh, we'll talk about that as well. The semiconductor stocks looks like it's also about to break out. And then where is the options trade bot? Oh, there it is. The options trade bot. So this thing has been on fire lately. And yeah, we just got an alert for Disney at the 165 strike expiring April 14th. Not a surprise. Again, taking advantage of that price upgrade. But Disney was just upgraded to, I want to say 220. I'm trying to look for it here, but I'm not going to waste too much time looking for it. But it was upgraded to a price target of 220 from 200. So I still think there is a really good opportunity on Disney here to dollar cost average. So those are the stocks that I'm looking at. And then, as I said, XLY, which is the consumer discretionary. This is something that I think you can dollar cost average in for the long term, still at a great price. And XLP, consumer staples, this is a safe-ish stock or holding for high inflationary, high interest rate environments. So that is what I'm currently looking at. Any questions in the chat? I know that I've probably missed a lot. Feed your head, but this is a negative catalyst. I mean, guys, the stock market is not... It's crazy that you think you get disappointed when you think it should moon, and you get disappointed when you think it should tank, right? I mean, most of the time, the stock market is not going to act as you should think if you don't have an advanced input into the market. If you don't understand delayed reactions, if you don't understand smart money dumping on FOMO buyers, if you don't understand volatility, intraday volatility. Look at this. I mean, the NASDAQ is now back to being minus 0.8%, and could essentially end the day at well over minus 1%, right? If you don't understand these things, you are going to get disappointed each and every time in the stock market. There is going to be intraday volatility. There are going to be delayed reactions. There is going to be the dynamic, unfortunately, of smart money buying up, like when we bought up those stocks that I just mentioned, dumping, profit taking on people that are like, woo, the market is going up, let me buy some now. And the smart money is like, all right, here you go, motherfucker, take my shares. You can have my shares. I already bought them when I should have bought them. When everybody was panicking, that's when I bought them. And now you want to buy them? Be my guest. Take my shares, right? That's what fading the market is called. So at the end of the day, you want to be that person okay. So when people are panic selling, like when this was at the 200-day moving average, take any stock, right? But especially blue chips. When people are panic selling, who's buying them, right? When you click that sell button, a lot of people tend to treat the market like a video game. They think just because they're sitting in front of the computer and they have a mouse and they are clicking buy and sell, right? It is very allegorical to a video game because you are performing the same functions as a video game. However, this is not a fucking video game. There's somebody on the other end of the screen that has to transact with you in order for your transaction to go through, okay? So when you're panic selling, someone, a human being, is buying that. Who's that person? Who is that person? Figure out who that person is. Study that person and then be that fucking person. That's who you want to be. Because when the market starts going up and you're scratching your head like, oh man, I thought the market was going to go down. I was waiting for more of a downturn. Why is the market not going down? But the inflation numbers, oh my God, but the Fed, but the market is not going down. I missed my opportunity. Yes. Those who pray for more of a dip will never buy the dip. That's how market psychology works. So when you see a stock that you really like, when you see a Diz down, a Microsoft down, when you see an Amazon down, don't think, just buy it. No, I'm not saying buy every dip. I'm saying do your due diligence. If there's a stock that you really like and it's down, then pick it up. If you don't like it for whatever reason, like a lot of people think Facebook is going to $100 or something. Fine. I mean, I'm not going to argue with your analysis. If you think that's the case, fine. By all means, everyone's entitled to their own due diligence, to their own opinion, to their own analysis. Okay? If that's what you think, fine. Don't buy it. I'm not saying you should buy every dip. I'm saying if there's something you have a high conviction on and it's down 30%, what are you waiting on? And hopefully those things you have high convictions on are blue chip stocks and not Beyond Meat, Tattooed Chef, Skills, Fubo, QuantumScape, DraftKings, Robinhood, basically all the Kathy stocks. All right. What you think about HubSpot? Oh man, I missed the question. Square, dark pool bot is everything. What's going on, Janine? I thought of you when I bought my first full share of Google this week. It was a great price for high conviction. There you go. And most platforms now do fractional shares too. And it's coming to TD Ameritrade because they were just acquired by Charles Schwab. The bigger fool theory was one of my top vids you did. Yes, Kareem, that was a while back. What was I referencing there? I think I was referencing SHIB. I might have been referencing SHIB when I was talking about the greater fool theory. Yeah. High frequency traders would buy as well. Sure, but they're the smart money, right? They're buying at levels that they know people are willing to sell at. Like when I look at the 200-day moving average, even if I'm day trading or whatever, why am I looking at that? Because I know that is a level that it's established there because that is a level where there is a lot of selling off and where there will be a lot of buying by smart money, whether that's done by algorithmic trading or whether that is done by human beings. Does not matter. We're all looking at the same levels, but those levels, those averages exist for a reason, because those averages are just a calculation of where there are buyers and sellers, right? Where the buyers and sellers meet. So yeah. Where can we see these bots? In the Discord, my man. In the Discord, right here. So if you want access to all this, just click whatever link you see in the description. But you see that the dark pool orders, we have the options trade bot. There's a scalps bot, stocks breakouts. By the way, we also have them for crypto as well. There's a crypto breakout bot that I implemented here. You see Theta breaking out. We also had the Bitcoin breakout occur a few days back. And there's also a crypto trading bot as well, showing you which cryptos are about to, that are showing like a bullish reversal. Here you could see that BNB looks like it is showing a bullish reversal according to this bot. Obviously, I've been doing the stream. I haven't had time to look into the specific alert, but that is where you will find the bots. So if you want access to all of the stuff and you get to talk to thousands of traders all day, every day about trading, it is a great value. Come be a part of the community. Also, I send out my watch list every single morning, my day trade watch list here. Every morning, we start the day neutral. And depending on what happens during the day, we buy puts if it crosses below a certain level. We buy calls when it crosses above a certain level. I did a whole video explaining this as well. But yeah, let us get back to it. You could see, I mean, volatility, man. It's like NASDAQ down 1%, now down 0.5%, S&P down 1%, now down 0.25%. You're going to get this type of volatility when it's, you know, all day, every day. It's just smart money, FOMO buyers, smart money, FOMO buyers, smart money, FOMO buyers, engaging in transactions. But the time to buy is when these things are down and when you're not having to guess, oh, why is the market going up? I thought it would go down. Or why is the market going down? I thought it would go up, right? Don't guess. Don't guess. The market can remain irrational much longer than you can remain solvent. Why did you not buy Facebook when it dipped? You said you would pick it up. We did buy Facebook, and I just told you I sold a cash secured put even before earnings. Great advice. Well said. I've been up Disney. Yes. Amazing. Really appreciate you explaining bots. Yeah, no problem. What do you mean? Do you mean you want me to explain them, or you really appreciate the way that I just explained them? I bought the discounted training yesterday. Oh, you bought the options course. Good job, Kareem. Yeah, unfortunately, that was a flash sale. It was on for 2 days. And so if you guys got it, then congrats to you. Can FB overcome the iOS privacy issue? Yes. So with Facebook, I don't think that there is a ton of growth there. So my argument with Facebook was that if you just take its legacy advertising business, right, its social media platform, that Facebook right now is trading at value. If you're removing, like, take away the metaverse, take away the AR VR component right there. What do they call it? Reality Labs. Take away Reality Labs. Facebook right now, if you just valued its advertising business and assume that it didn't grow much more, this is essentially what it would be priced at. This is what it was priced at before the Rona drop, right? Before we even knew what the metaverse was. But it doesn't, you know, I think that it will have stunted growth. I think Facebook getting back to near $400 will be a very long time. It will have to show that the metaverse is actually something it can make money on, and Reality Labs is something they can make money on. Maybe they do even more acquisitions. Maybe they try to monetize WhatsApp further into something. But TikTok is crushing Instagram right now. And as you said, the iOS privacy issue or gate, the iOS privacy gate is really hampering their ability to grow on the advertising front. But as it stands, they still have millions of advertisers. Me, Kevin, always used to make fun of people selling on red. If that's the case, then that sucks. You know, I certainly wouldn't make fun of people, but I would tell people that, hey, you know, it depends. It depends, right? I'm a huge fan of rotating. So people are like, if people are like, oh man, I'm just going to bag hold this. I bought AMC at 70 and now it's 19. I'm just going to hold it. Or I bought DraftKings at 60. Now it's, I don't know, what is it, 20 or something? Even when there presents an opportunity that now blue chips are in a correction or a bear market, and you don't rotate into the blue chips, I have, personally, I have a problem with that. But I wouldn't make fun of somebody for it. But personally, I have a problem. With it. I thought Kathy Wood was your baby mama. Trish, come on, Trish, don't insult me. You know who the number one Don Dada baby mama is right now. I'm fickle when it comes to these things. You know who it is. This is hilarious, by the way. Nancy Pelosi saying that they are working on a ban on stock trading for lawmakers and senior staff. I'm sure 1000% that there is like a little caveat in the bill, right? Like this little fine print in the bill that says, except for me. I mean, I would not be surprised if that was the case. If she wanted to ban everybody else but herself for insider trading, because she wants that number one spot. She's a competitor. All right. Let's see. All right. Howard Stern reference. Is Nancy your baby mama? Yes, you know that. All right. Sub-Z, please do a quick review on Fisker. A review on Fisker. Fine. I mean, that's like as boring a stock as you can get. But okay. I mean, I think people like the EV stocks because they missed the Tesla boat, but most EV stocks are likely not going to do what Tesla did. Let's see. Kathy back in the day, hottie. I mean, even Nancy was. I posted a picture of Nancy. This is how old Nancy is. I posted a picture of Nancy and JFK. Insane. Like she was standing right next to JFK. If I can find it, I'll show it to you. But actually, I think I posted on my Twitter. So go back on my feed and look. All right. Yes, guys, hit that thumbs up button. So Don T says 1,500 viewers, 293 likes. Hit that thumbs up button. I'm giving you guys I'm supplying you with a wealth of information. Thoughts on Astra Space? Come on, fam. All right. Can Palantir get to 18 if they beat earnings? Sure, why not? They've been there before. But Palantir is not a $1 trillion company, no matter what anybody tells you. Look, Palantir will be a $1 trillion company eventually when everything is a $1 trillion company, right? Like there was a time when, back in the day when $100 million was a mega cap stock, right? Because of inflation, now the standards are set, and if you're more than, if you're more than 10 billion, then you're considered, I guess you're considered mid cap. If you're more than 100 billion, you're considered mega cap. Eventually, all stocks will be worth $1 trillion. That's when Palantir will be worth $1 trillion. All right. So if that's the context in which you think Palantir is going to be $1 trillion, sure, but not by current standards. All right. I think I'm going to get off. How long have we been going for, guys? We've been going for a while, right? An hour almost. Yeah. I think I'm going to get off the chat and head up the Discord and put in some trades. Anyone holding GGPI for reverse merger? No, we sold cash secure puts on GGPI. AMC running. All right. I might look into an AMC trade soon. I think that was on the options trade bot as well. Guys, hit that thumbs up for the love of God. Let other people find this. All right. What do you think of the semiconductor? Finally, a great question. I think the semiconductor market there are some insane opportunities for the long term. Oh, Intel, another stock that we bought. Intel's building out 2 fabs in Ohio, set to complete by 2025. At that point, they will be 4 versions ahead in their process. I think Intel for the long term and it's trading at 9 times earnings compared to between 40 and 60 for AMD and Nvidia. I think Intel is a steal at below $50, but you will have to hold it for the very long term. So this is like a retirement type of stock, in my opinion. SOXL was another stock that we alerted at the 300-day moving average. This is a semiconductor ETF. And I think that this one, after the talks of, high rates and whatnot subsides, this is going to be for me, I don't mind buying it at the 300-day moving average, but this one will likely rally into new highs. Taiwan Semiconductor, I think always at major moving averages is a good pickup. As I made a video, and actually on that video, I said this is the most undervalued tech stock. And on that video, I was bombarded with comments because right after that video, we saw a bit of a downturn. And now Xilinx is back near all-time highs. And I said, guys, if you want cheap shares of AMD, buy Xilinx. This is the most underrated tech stock. For every 1 share of Xilinx, you will have 1.7234 shares of AMD, because if you don't know, AMD is acquiring Xilinx, and there was a 20% arbitrage opportunity because the deal spread was trading at a 20% discount. But now, if you look at the difference between AMD's price and Xilinx is almost exactly 1.7234 times the price of AMD shares. So that discount no longer exists. And those who laughed at that video missed the boat. Laugh all you want. Those who didn't, I appreciate you. Those who bought, good job. You guys got the discount. And now Xilinx is back near all-time highs, as we just got conditional approval from China that the AMD Xilinx merger is going to go through and will likely be executed by the end of March. So yeah, I do like a lot of plays in the semiconductor space. However, I think AMD and Xilinx, that boat has been missed, unfortunately. I mean, you could buy AMD shares outright. It looks like it is coming back into that descending channel that I drew there. I don't even remember when I drew that. But that deal spread between Xilinx and AMD, that boat has been missed, unfortunately. So yeah. Nancy's like a bank robber that became a police officer. Oh man, you guys are hilarious. All right, any tips for a beginner? I mean, that is such a non-specific question. Oh, speaking of that, there was the fucking funniest comment that I got. 2 of the funniest comments that I got about that, because I always say be more specific. So somebody left a comment on YouTube, says, girlfriend, I'm pregnant, traveling trader, be more specific. And of course I had to heart the comment, and I even thumbs it up. I mean, this such a baller comment. And then there was another one which also had me dying. Not as funny, but hilarious. Some dude commented on my last video and he said, nice haircut, bro. I said, I'm wearing a hat in the video. And I was wearing a hat. So thank you guys for providing endless amounts of comedy. But yes, be more specific. That's what I'm going to tell you when you ask me, brother, any beginner tips. It depends. Are you talking about technical analysis? Are you talking about fundamental analysis? Are you talking about options trading? Are you talking about damn, I missed a lot of questions here. PayPal. Okay, PayPal, fine. Join the Discord for any beginner. Ryan Gabriel says, yes, we do have a beginner section, actually. Now that you say that, thank you for for informing me, Ryan. So there is this beginner section here, beginner questions. There is technicals for beginners. There is fundamentals for beginners. And we actually hired Coach K, who used to be a financial analyst at Payne Weber for 10 plus years. And we're glad to have her on board. And she is busy in the chat, always answering beginners' questions, going over technicals for beginners, how to evaluate companies using fundamentals. A great, great addition, an amazing resource, and happy to have her, and certainly super qualified. I mean, you work 10 plus years as a financial analyst at Payne Weber. I didn't last 10 years in the finance industry. So props to her. Yeah. All right. Let's see. Hitting the like button now shows appreciate. Yes, guys, hit the like button. All right. Let me see. I think I'm about to wrap this up, guys, and I will do another one soon. But yes, hit that thumbs up so that other people can find this. Blue chip stocks versus QQQ. I mean, QQQ is full of blue chip stocks. So, yeah. All right. You should sell. Be more specific. Oh, my God. Abalash, what a good idea. What a good idea. Be more specific shirts. Yes. You know what? And I might even print, like special edition, I might even print that comment, that pregnant comment on the shirt. On the shirt. Ropester says that was me. Amazing. All right. Let's see. PayPal. Fine. Fuck. How many times are you going to ask for PayPal? I'm just kidding. PayPal looks terrible. Absolutely terrible. This is one of the ugliest charts known to man. PayPal keeps getting downgraded. It is not doing too hot in terms of its outlook, its guidance. I think Apple's coming out with its own terminal for businesses as well. Will not be a good look for PayPal or Square for that matter. But yeah, I think right here, the reason that it is finding support is because this is right where the high was before the Rona crash, right? You could see here. And this was also established in July 2019. So, I would say look at, if we look at let's see. Let us look at what the multiples look like currently for PayPal. So I'd want to look at it from a fundamental standpoint, okay? How many times earnings is it currently trading? Let's see. Oh, my God. See, it's the growth story that is killing it. At one point, PayPal was a great growth story. Not so great right now. If you look at its growth compared to the sector median, not doing too hot. And valuation-wise, this used to be worse. But like I said, this is now trading at a more attractive valuation. Still trading at 27 times earnings. Not the hottest. Not the hottest, to be honest. Not the worst, certainly. The sector median is at 22. But it looks like PayPal could have a little more room to fall. It's just that I would be very, very cautious against, making this a large stock in my portfolio. You had a bear flag. You had another bear flag. You had another bear flag. Like, this is not, you don't start loading up on a stock like this. You want the stock to find support. And then, even if it bounces, and you miss out on 5% or whatever, I mean, that's still way better than buying it and then it tanking again. But unfortunately, I don't know. I personally would not buy this here if you're asking me. I think you can afford to wait. So, yeah. And that's a stock that you would definitely want to have a stop limit on, like we did. Like, I did buy PayPal before, way higher than this, but I had a stop limit on PayPal. And in the video, I said put a stop limit on PayPal. All right. Polestar GGPI. Yes, like I said, we have cash secured puts on it. And after the merger, sure, it can go up, but you better take profit on that. Thoughts on Disney? Rewind the tape. Talked about it already. Also, be more specific. Why the fuck is everybody asking about HubSpot? Wow. Okay. It had a 6% day. Okay. Inverse head and shoulders. Sure. Did it report earnings yet? No. Reports today. So I don't know. What do you ask a specific question? What about HubSpot? Inverse head and shoulders has earnings today. If you're risk averse, hold out, right? Wait until earnings. If you are not risk averse, then go ahead and YOLO in it. I mean, I don't know. What about it? What do you want me to say? We can check options flows and see, oh, wow, Diz options flows going ham. That bot that on the Discord that called out Disney while we were on the live stream, that play is probably panning out or will pan out. There isn't much flow on HubSpot. I don't know what is it about HubSpot that you're so obsessed with that you just keep writing one word, HubSpot, and you're not really articulating what it is about the stock that you want me to look at. Terrible valuation, 318 times earnings. What the hell? I mean, as I say all the time, if something is growing, then the market is willing to put aside valuation. But yeah, I mean, it better show out on earnings. It better show out on earnings. Again, I don't know what it is you want me to elaborate on here, but this is an inverse head and shoulders, which is a bullish reversal pattern, potentially getting stopped out at the 300-day moving average, waiting for earnings to be reported after market close. So there you go. Do you think this is a fake out? There's nothing to fake out. This is just volatility. It's going to go up and down, up and down, up and down. Inflation numbers were not great. They were worse than expected. They weren't as terrible as one could expect a miss to be, but they weren't great. And Papa J. Powell is going to have to come in, with his whip and whip this market back into shape whip the economy back, whip inflation back into shape, not the market. Because this is going to get out of control. It's clear that inflation is not going down. So you can expect more aggressive rate hikes by March 16th. Yeah, for sure. And that will likely cause an initial shock on the market. But as I said in my last video, pay attention to the 10-year. Now again above 2%. Pay attention to the VIX. We need it below 20. If those two things don't happen, the market is in for a world of volatility. Yeah. So I don't know when you say fake out. I mean, the markets are still red. I don't understand what's the call out of this fake out is. Any thoughts on magical Bitcoins? Yes. Bitcoin. We bought the dip on Bitcoin when it hit. So Bitcoin, I haven't been actively trading. I've just been buying and holding at certain levels, but it basically confirmed this head and shoulders to the downside, started finding support here. We ended up putting buys on Bitcoin at, let's see, and then I'm going to get off the stream for sure. Around the critical supports at 30K. I don't even remember when. We had buys at 33K. I remember that. And yeah, it was an automatic buy. And Bitcoin hit a low of 32,917. So at least for that buy, we were able to catch that. But yeah, I mean, it confirmed the bearish head and shoulders. Now crossing above the 50-day moving average. I think Bitcoin can easily, if we can get above this right shoulder, if we can get above 50, I know it's a tall task, but a lot of people didn't think we'd be at 45K this quick. If we can get above 52K on Bitcoin, 52.5, then that is going to likely rally back into all-time highs for sure, because that is the height of the right shoulder, and you want the reversal to take place above the right shoulder for you to confirm that this head and shoulders is no longer going to have an effect on the corn. All right, traders, I appreciate you. Thank you so much. On your way out, please leave a thumbs up so that more people can find the stream. Be nice to your viewers. Noob, I'm just messing around. I'm just messing around, man. It's clear that I'm messing around. And I think if you've been here a long time, you know that I'm messing around. But yeah, thank you guys so much for joining. I appreciate you. Thank you so much to the donations to St. Jude's. Leave a thumbs up on your way out. I love you guys. Thank you guys for the questions. Hopefully I provided you with some entertainment along with some information. Again, look at the 10-year. Again, look at the VIX. If it's still above 20, if the 10-year, rises above 2, market is likely in for a lot of volatility. But yeah, guys, love you. Peace.